Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 5, the exercises in Group B. Okay, note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. And that's what you're seeing me do in these videos. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or speak, meaning telephone, with an instructor to help and get that understanding. Okay. So, exercise 5-28B, 529B, and now this 530B, all right, use the same set of data from 528. So go back and watch 528B, and that was about using FIFO. 529B is about LIFO, and now this 530 is about average, the weighted average cost. Okay, sorry. In 28B, I explained the theory behind using FIFO and LIFO. So then when I did 29, all I did was just work the LIFO. But now we're going, I'm going to work average cost. And while you can watch the average cost as a standalone, it helps to understand the differences between all three instead of just the method used, the process. Okay, so it just helps to, understand the totality of the concepts, okay, of what makes one method different from the other. All right, so again, I'm going to just work through this, right? Things to keep in mind that our sales price is 185. That'll be important for when we're actually making the journal entries, and also that the purchases and sales are on account. Okay. So on 3-1, I'm going to put purchases here. I'm going to put cost of goods sold here, and then I'm going to have my total cost, my total inventory in this column here. And on 3-1, you can see we're starting out with 6 units at 100. So I have 6 at 100. So my total cost for the inventory is $600. That's what we're starting out with. So on 3-7, we're going to purchase 8 at 108. Okay. Now, 8 at 108 means the purchase amount is $864, right? 108 times 8 is 864. Now this is where this begins to deviate from FIFO and LIFO. From FIFO and LIFO, if you watch the other videos, you can, we basically just listed, I would have put 6 at 100 and 8 at 864 and would have kept their normal cost. But this is average costing. Whenever we make a purchase, we have to recalculate our inventory at an average cost. Okay, so if I had 6 before and I have 8 now, all right, means I have 14 in inventory. Right now, I'm buying 864, and I had $600 as a total cost in my inventory before. So I have 1464 is the total value of my inventory, right? When I add the 600 plus the 864. But now I have 14 units, okay? Total, the 8 and the 6 is 14. So I have to divide the 1464 by 14, and that ends up giving me an average cost of $14.57. So I have 14 at 104.57 which gives me my 1464 as my total cost for the inventory as of 3/7. Okay, so notice what I just did here. Okay, you know, I'm not picking, you know, I'm just recording things, but I have to do this calculation. I'm doing two things. One, I'm taking and I'm adding up the number of units. The 8 and the 6 is 14, which gives me the number of units I have. And then I'm also taking the total value, the 864 of what I buy, plus what I have, you know, as my total cost, and that gave me 1464. And of course, then I divide one by the other. I divide the 1464 by the 14 to give me my average cost of 104.57. Notice it's not 100 and it's not 108. You know, these 6 were bought at 100, these 8 were bought at 108, but that's no longer valid. All of them are averaged out. That's why it's average costing at 104.57. Okay, that's what average costing is about. You know, yes, you know, whatever we spend on our purchases, that's going to be our total cost of the inventory. All right, you know, what we spend is what we spend. You know, that doesn't change. But what we assign as the value of that inventory, you know, does change. You know, the 6 are no longer at at $100. You know, those 6 are at 104.57, and these 8 that we bought at 108, they're no longer at $108. You know, those 8 are now 104.57. Okay, and that's what average costing does. All right, so then we make a sale. All right, so on 3/11, we're selling 10. All right, so that means we have to take 10 out of our inventory. All right, so we're left with, you know, we have 4 left, and the 4 are at the 104.57 because that was our, you know, new amount that we had assigned to the inventory. Right. So let me see here. Let me do the math here. 104.57 times 4. Okay, so we're at, we are at 418.28. Okay, is the value of our inventory. Now 4 to 104.57 is 418.28. Now I noticed that the solution just rounded to 418. All right. In the real world, you're not going to do that. You're going to do what I'm doing here. So I disagree with what is in the solution there. Okay, you don't just round arbitrarily like that. I mean, sure, they're telling you it's rounded. Okay, but you don't, you know, you should work it out to the penny here. So I'm going to work it out to the penny. I'm not going to just make it round off to 418. You know, materially, does that affect anything? You know, for a few cents, materially, no, it doesn't. All right. But you might as well do it just the right way. Right? If you end up with large units, a large number of units, and large amounts, you know, then those those cents amounts, you know, do come into play. So you might as well just do it right, you know, right from the start. I would not, you know, round to 418 as my total cost on my inventory. All right, so now on 319, we're going to purchase 13 more at 112, and that is 13 times 112 is 1456. Okay, so if we have 1456 and we have 418.28, our new total inventory amount is 1874.28. Okay, and now we have 13 plus the 4, so we have 17 units. We have 17 units so we have to divide that total inventory value by the 17 units. And when we do that, we end up with 110.24. Okay, so the new value of all of the units are 110.24. Notice again that even though these 4 units here, when we after we had made the sale of 10, we had said, oh, these units could have been 100. They're not. If depending upon which one we had taken, we might have had them at 100 or 108, but that didn't matter because that was the new assigned value of 104.57 due to average costing. Well, now we're changing that amount again due to average costing. Okay. Instead of the units being at 104.57, now they're all at 110.24, and these 13 at 112, they're all assigned the value of 110.24. So what I'm getting at here is like here, and when we took 10 out of these here 14, those 4 could have been 4 at 100. All right, that they would just arbitrarily taking, we might have left the 4 at 100. So even though those 4 at 100 had a cost of 100, that cost changed to 104, and they changed again to 110.24. Okay, that's what average costing does. It's always, every time you make a purchase, you're reassigning the value of each item in your inventory because you're averaging them out all the time. And notice that you're only doing that when you make purchases. You're not affecting that when you make a sale, okay? Because now when we come to 328 and we make a sale of 9 units, okay, we're taking 9 out of this 17, which means we have 8 left. So 8 at, oops, we have 8 at 110.24 because that is the amount that we've assigned to each item in inventory. So I have 110.24 times 8, which gives me okay, come on, pen, 881.92 is the value of the inventory on 328. Okay, so that's keeping track of my perpetual inventory using the average cost method. Now, my journal entries are going to be basically the same kind of entries that we made in 328 and 329. So I'm just going to briefly go through them. So on 37, I have a purchase, right, on account. So I'm crediting my accounts payable. I had 8 at 108, so that's 864, and I'm debiting my inventory for 864. Okay, so that takes care of, let me do this here. That takes care of the purchase here. Pause the video, write that down, because I'm just going to erase and do the next one. Okay, so now we're making a sale, all right? So we're selling 10 at 185, and we're doing it on account, so that's accounts receivable, and the sale was 1,085, 1850. 1850, and I'm going to credit my revenue for 1850. If you go back and you watch the other videos, you'll notice that, that stays the same. Okay, that doesn't change. And of course, when we make a sale, we have to take it out of inventory. So we make another entry to decrease our inventory. So we're going to credit our inventory. In this case here, we're selling 10 at 104.57. So our it's 1,045.70, and we'll debit our cost of goods sold for 1,045.70. So that's 10 times 104.57, right? So that's our entry to move them out of inventory and put them into cost of goods sold on 311. Okay, so that's that. On 319, again, we're purchasing, right? So we're going to credit our accounts payable. 13 at 112 is the 1456. And so that goes to inventory for 1456. And now we're going to move to the 328, which is, basically the same thing. Again, the 37 and the 319 are the same, and the 311 and 328 entries are basically the same. It's just different amounts, right? So we're making a sale. We're debiting accounts receivable. We're selling 9 at 110.24. I'm sorry, we're selling 9 at 185. So I have 185 times 9, which is 45 for 76, 16. That's 1665. And then we're going to credit our revenue for 1665. And of course, when we make the sale, we have to take it out of inventory. So we credit our inventory, and it's 9 at 110.24. Right, so that's 36, 3, 21, 2, 9, 9. So that's 992.16. And of course, we have to debit our cost of goods sold for 992.16. Okay, so that's it for this problem. And again, go back to 528 for FIFO, 529 for LIFO, and of course this one at 530 in order to understand the differences between all three methods. But 528 explains the difference between FIFO and LIFO. 529 just shows me doing LIFO, and of course 530 is just showing me doing the average cost. But to understand the differences between the three, watch all three videos. Okay. All right, so that's it for this problem, and we'll see you in the next one.